So we'll continue with the presentation on the current state of Mongolian international bonds, delivered by Mr. Florian Schmidt, founder and director at Frontier Strategies. Mr. Florian brings over 3 decades of experience with deep expertise in frontier markets, particularly in Mongolian debt and capital markets. Through Frontier Strategies, he has advised on and managed multiple transactions in Mongolian government and corporate bonds, providing strategic insights to international investors, exploring the country's fixed income landscape. Mr. Florian's experience bridges global investment practices with Mongolia's evolving financial market, offering valuable perspectives on the risks, opportunities, and trends in the bond sector. Please welcome Mr. Florian Schmidt to the stage.
Good morning, everybody, and it's my pleasure to be here. Let me see whether I can handle the technology here. Again, thanks for being here, and it's my pleasure to give you a bit of an idea on what happened or how Mongolia presented itself in the international capital markets over the last couple of years, and also a humble outlook from my side, what I think will happen or what should happen to continue what has undoubtedly been a great success story. So I've been active in Mongolia since almost 20 years. My first business visit was in 2006. In the subsequent years, I worked in investment banking at the time. The main task was to bring Mongolian issuers to the international capital markets and also make investors familiar with that. So that got me involved with Trade and Development Bank of Mongolia as the first issuer from the country, followed by Development Bank of Mongolia, Mongolian Mining Corporation, the government, and a couple of others. But what I really want to talk about is the success story since 2017, which funnily enough coincided with the year when I left banking and started my own business, Frontier Strategies. So in 2016, I got a call from the Ministry of Finance that the government is in a problematic situation managing its debt stock. There were talks with the IMF. The IMF was proposing a huge international debt restructuring for Mongolia, and at the time the MOF was more favoring a market-driven solution, so let's call it a softer solution that would also prevent Mongolia from having the stigma as a defaulted country and entity, because we all know once you default as a country, it takes many, many years of goodwill, reforms, and what have you to get back into the investors' positives book. I think the crisis situation Mongolia faced at the time was best illustrated by the last bond they did in 2016, which was the Mazalai project. Mazalai is a very rare species of bears. You can only find in the southern Gobi. I heard the latest was there are only 23 of the animals still there, but it has become a kind of a national symbol for Mongolia. So this bond, however, was anything but easy. It was also attracted rarity as far as the order book is concerned, because the government needed $500 million and they just managed to get this. And the coupon was 10 and 7/8%. Of course, this was something the Ministry of Finance wanted to get rid of as fast as possible. Any sovereign entity borrowing at rates above 10% is in some shape and form also stigmatized. So the task was here very clear. Get Mongolia back into investors' positive books, increase the investor base, and most importantly also lower the funding cost and make sure that the IMF would conclude that not just this funding exercise in 2017, but the debt stock of Mongolia becomes sustainable. So that's the start of, on the right-hand side, Project Kuldai. They all got Mongolian names only from 2021 onwards. The project was century to celebrate the 100th year of independence of Mongolia. So what we achieved, and I don't want to talk too long about it, is you can see the order books grew from 3 to a peak of 6 billion, have regularly been above $4 billion. which means Mongolia has absolutely, as far as the sovereign is concerned, absolutely become a mainstream investment. There is barely, if you look at the top 200, 300, 400 investors, international investors, global investors, so I'm talking not just Hong Kong, Singapore, I'm talking London, I'm talking continental Europe, I'm talking Middle East, US East Coast, US West Coast, most of them would hold Mongolian or have at least traded Mongolian sovereign bonds. It has become a mainstream instrument, very similar to mainstream sovereign, emerging market sovereign like the Philippines or Indonesia, who both had the luxury of now being investment grade, but that's clearly a target we are aiming for as well as far as Mongolia is concerned. So we took over Mongolia as a triple C rated country. Today it's a double B rated country. So I guess not only on the fiscal side, budget surpluses, etc., all the items that were applauded by the rating agencies and the IMF, I might add. On top of that, investors, rating agencies have gotten a lot of confidence in the way the Mongolian government is managing their debt. As you all know, the debt to GDP ratio have been declining. The government has used opportunities to repay stubs remaining from liability management exercises, from tender offers, to repay them from the budget. So the deleveraging was happening on two areas. Number one, of course, as Mongolia continued to grow, and they did not raise new money for projects or anything, but they only did liability management, and which were debt neutral or even debt negative, as I just mentioned. And that was in fact the second element which brought the debt to GDP ratio down. I think 80 to 90% of all countries, G7 countries in the EU or Japan or the United States would really like to have the debt to GDP ratio of Mongolia. The problem is the United States, Japan, Germany, all those countries, France, they all get forgiveness, but I think they are stretching it a little bit at the moment. An emerging market economy would not get any forgiveness with an 80, 90 or 100% debt to GDP ratio. Mongolia is at 35% at the moment and people still ask questions. That's just as an interesting footnote. The other thing I want to highlight is cost of funds. Cost of funds went down. Again, then there was the big change in interest rate, but the paths are pretty much the same, which we have managed prior to COVID and then after COVID again. By the way, another footnote, Mongolia was the only single B-rated country that was able to raise funds in the international debt capital markets during COVID, apart from Honduras. So that's a bit of a rarity as well. So what we achieved was back in 2021, a 5-year deal with a coupon of 3.5%. Now compare that with US Treasuries today. That was the lowest ever coupon achieved for a single B, at that time single B rated sovereign. You look at the last transaction we did, the coupon was higher, 6 5/8, but it was the tightest ever spread against US Treasuries, and that is almost the more important parameter you want to look at, not the absolute coupon, but actually the spread against US Treasuries. It was done at 222 basis points over. Mongolia still trades very stable, around 220 over. I want to talk about that a little bit more a bit later when we talk about the future and which direction all this is headed. But overall, I think the bottom line here is from a sovereign perspective, it's mainstream. It's trading at record tight spread against US Treasury. It got upgraded to double B. So pretty much all the ingredients are there for a continuation of the success story. Now, a huge concern of investors about Mongolia, once they got familiar with it, of course, and this applies to all non-investment grade or frontier market issues, is liquidity. So people are always saying, okay, if something happens, everybody runs to the same door at once. Bid-offer spreads get wide, that you can drive a truck through, and so they're worried about what happens if some event happens, either a credit-specific event or some event in outside of Mongolia. And that prevented a private market from developing for many, many years. So the fact that we now can do private transactions, and the DBM deal was the largest ever private deal done in Mongolia. Its benchmark size, $500 million. It was built in a few stages, as there were a set of investors who were happy to have it at $300 million, part of the JACI credit index. Others wanted the EMBI. They came in, if you can get 500, we would do it. DBM always said they need 500 million. And we tried to do it in a private deal simply to be a little bit faster than through the usual public route. The fact that deals like this can get done today is nothing but a testimony of trust to Mongolia as a whole, because investors who buy these kind of deals are assuming this is has some liquidity, of course, but it doesn't have the liquidity of a public deal when you have 200-300 investors in the book. Here we are talking about 20-30 investors in the book. So these people say we have enough trust in the Mongolian sovereign story and the sovereign subdivisions, in this case DBM, that we are happy to buy this, even if it means it's buy and hold over the lifetime of these bonds. That is a very important finding, that investors are now comfortable enough that it doesn't have to be these liquid, large-size benchmark issues anymore. The trailblazer for this, of course, was Sovereign Guaranteed, which was last year the city of Ulaanbaatar. They did the first private deal. Those of you who live in Ulaanbaatar, or those of you who have visited Ulaanbaatar, or the braver ones of you who visited Ulaanbaatar in winter, they know that it's a highly polluted place. It still has its charm once you are inside buildings, but it's a highly polluted place. And so the government put it pretty much on top of the agenda to relocate people from the Gare districts, which are surrounding Mongolia, which are surrounding Ulaanbaatar, and they're burning raw coal in these Gare districts, which then puts a layer of soot and coal dust and all these items not very healthy to your bodies on the city. So there is a keen program to move people away into proper housing, which is also benefiting those people because they have running water, they have electricity, etc. So that project was supported by the government. The government is very tight on guarantees. This is a question I always get on roadshows about the guaranteed debt. But this was, you may call it an exception, that the government says we will guarantee to make sure it works. So this was kind of the trailblazer for private debt. Now, I've got a lot of inquiries on private debt, also from smaller institutions, and I don't want to sound disrespectful, but private placements are still very tricky animals. Not everybody can come to the market just because a few of the big guns did a successful transaction. What we do see is we are seeing trickling this down into the corporate and into the banking sector. The banks that have been most successful, of course, are still the ones that are systemically important. Golomb did a transaction. I was honored to act as their advisor on this. TEB did a couple of transactions. Also in the private space, Golomb did it in the public space, which marked the return of Mongolian commercial banks to this sector after a 12-year absence. The transaction was not cheap. We would have liked to do it cheaper, but it set it followed the typical path in an emerging market. The first transaction can be very painful and expensive, but Golomb is now trading just north of 8.5%. So it shows, and the investors, a lot of the guys who were sitting on the fence initially weren't sure whether they should buy this paper or not. They all came in, and they should have come in earlier. They would have made a decent amount of money on this trade, but they choose not to, so I guess they learn for the future. So that's kind of an idea about the issue universe. Of course, there are others. I guess Ulemch will talk a bit later about Mongolian mining experience as a true corporate issuer. Mr. Gantulga will talk about MIK, so we have all the range of issuers here. Generally, Mongolia's issuer universe is increasing. It goes down from sovereign subdivisions into the private sector, corporates, as well as banks. A word of caution, not every bank, not every corporate will be able to immediately raise funds. The key point here is, and that even applied to the government, the key point is a narrative. You can put a single B rated entity, even a triple C rated entity into the market with a good narrative, good governance, good transparency, etc. So it all depends on a couple of factors as to what is possible. Just assuming I'm running a good company or running a good bank, let's try a transaction. And I heard a lot of rumors in Mongolia who will come to market. I can only advise them to pick the right people who know Mongolia, who know the investor base, because if there are a couple of issues, couple of transactions failing, that would not be good for the country. That would set it back, and we don't want to have a situation like this. So far, touch wood, we have been very successful with pretty much everything that's been done. There's a big feeling of responsibility in the Mongolian Isios community as well. So what's going to happen from here? So Mongolia trades at all-time tights. What I think is important here is that we might see interest rates shifting downwards. Of course, this will be a function of trust, on the other hand, in the G7 countries, to what extent they can manage their debt. But if interests indeed are going down, it will obviously be a positive for emerging market Isios in general. The sentiment towards EM is very positive. We've seen, fortunately, a couple of African countries who were at the brink sorting out their debt. What happens in Argentina at the moment is extremely encouraging. So generally, I believe the overall EM environment in which Mongolia is positive. A big question mark is the Mongolia-China relationship. We believe Mongolia is relatively well insulated, and this is people always contact me about coal prices going down and that being a real threat to Mongolia. Interesting enough, the rating agencies took the view I've been communicating to people, because it's not only a coal play. Mongolia is much more than that. That's number one. Secondly, Mongolia, the export destinations the import destinations have changed quite dramatically, because China has substituted over the last 5 years. They've substituted seaborne coking coal with landborne coking coal. So we are looking at less Australian, Canadian, US imports, and we are looking at much more Mongolian imports. So that's one thing. Secondly, the railways are being built. We all know that coal is a transportation cost play. With the railways being built, and if at some point in the future, hopefully the transshipment point to connect the Russian or Mongolian broad gauge with Chinese standard gauge is done, Mongolia can fully benefit from what is a pretty dramatically lower transportation cost. So that process is in full swing. Copper is not even a topic to discuss, because copper prices are elevated, will remain elevated. The problem with copper is the supply side, not the demand side. But notwithstanding this, we've been telling the government, and the government has been telling investors, what Mongolia really needs to do is diversification. I heard that word, fortunately, in the previous presentations. Diversification in 2 areas. Number one, the economy itself. Yeah, there have been lots of failing examples of economies that are relying on commodities. Commodity-driven economies always attract corruption. They always attract shady businesses. Mongolia needs to make a choice whether they want to be the DRC or the Qatar in terms of income, in terms of wealth distribution. They are at the crossroad. I'm a little bit worried about all the shenanigans at the moment happening in Ulaanbaatar on politics, where I'm not sure, is it nation first or is it me first? But I hope they will find the right way. I hope they will see the light. We are all full of hope here. That includes me as well. But if they find the right way, Mongolia will be a very wealthy country. That means diversification of the economy. We heard Kashmir. Mongolian Kashmir is second to none. It's a fantastic commodity. I think Mongolia can do much more in agriculture. If I go into the supermarket in Mongolia, the processed meat there doesn't always look that appetizing. I think food processing would be an area where more can be done. these are smaller things. Of course, Mongolia can be a hub for ecotourism, and then, of course, renewables. I hope I will still be in my business and I see Mongolia exporting renewable energies to China. I hope that will happen at some point. So renewables, the potential is huge, and we heard this in the second presentation today. Rare earth. So now I'm talking about diversification of export destinations. The Europeans need rare earth, the Americans, everybody needs rare earth. China is, let's say, playing their cards extremely well in that area. So Mongolia could really step in and do a lot, and the Orano uranium project, I think, is a step into the right direction. We are looking at the so-called third neighbor policy. And then the third area I want to quickly talk about is data centers. When I fly to the Middle East, in Qatar and UAE and everywhere, people are building data centers in countries that have 50 degrees heat in summer. Mongolia would be a much, much better destination for that. But of course, Mongolia will need energy, but it has the resources. So I encourage all of you who have a bit of money in your pockets to look at Mongolia. Invest in building up a proper energy infrastructure that can support AI business, data centers. Uzbekistan is a really good example. Right in the neighborhood, they are doing the right things. I don't see a reason why money should not go to Mongolia and invest. These are the really important things I believe Mongolia needs to tackle going forward. If they get these three things right, it's going to be a really bright future, and I think then spreads will tighten even further, and then we are probably looking at a real chance of getting a BBB rating for the country. Okay, I think I need to be quick. I'm getting yellow cards all the way over from there already, talking too long. Sorry. Okay, a bit of the market's outlook as well. The government has started to issue Tugruk bonds. That's good news. I think the idea, and that's really a lesson from the 1997 Asian crisis, which was, of course, a currency mismatch crisis, apart from being a leverage crisis. It reduces the risk of external shocks if you have more debt in your own currency than in foreign currency. So that is the right thing to do. Hopefully, this attempt by the government will trigger two very important things. Number one, Mongolia's investment market is still a bank market. The only investors to take note of are banks. There is no proper pension fund investment. There's no proper life insurance segment. We hope this will happen soon. We hope that development will go along with it, as it did in Asian currency markets like Singapore or Hong Kong and others, Thailand, etc., etc. Secondly, what is equally important is the development of a swap market. So we have all these international investment bankers coming in saying, "Oh, we are committed to Mongolia." But when you ask them, "Okay, can you do Tugruk dollar swaps?" Everything turns suspiciously silent. At the moment, this is a monopoly of the central bank, and that monopolies always means there's distortion of prices. I appreciate what the central bank are doing, I really do, because they are the only facilitator at the moment. I would encourage people to think about, if there are any bankers in the room here or anybody who can do this, help develop that swap market. It's very important for Mongolian entities to manage their liabilities. On the equity side also, there could be more done. For the last 5-6 years, I'm hearing 20% single ownership. The funny thing is, if a guy like me who really likes Mongolia, and I would really like to buy stocks of Mongolian banks, and the law allows me to do that, and they are giving you 10, 12, 14% dividend. It's a nice buffer against any currency risk, but I can't, because you have to go through a brokerage, and I need to be a resident of Mongolia in order to do that. So I think when people say and have great plans, we want to make sure that the ownership of the Mongolian banks is more diversified. Well, get the act together first and make sure that people who actually do business in Mongolia and like the country can actually buy the stocks, because at the moment that's not the case. So that's just a little bit of a footnote on the side. Few words, there's no presentation without propaganda. I apologize for that. So, of course, we have a pretty decent track record in advisory business, starting with the sovereign, doing several others in the past and at present as well. We are not going after every situation in Mongolia. We're not going after every issue. We're doing our due diligence. There has to be a good story, because there's one thing more important than anything else. We are not going for quantity. We are relentlessly striving for quality, and most of our transactions won awards from the international finance community, and we want to keep it that way. We are not in the business to do mediocre deals for Mongolian issuers, because specifically frontier market issues have to perform. They have to trade up. They have to create a win-win. Investors need to be happy, otherwise they don't come back. If you do a bond and it trades down by 5 points the next 2 days, investors may not come back. You're just running that risk. If you don't want to do that, then go to the loan market. But the thing is, we want to make sure that investors are happy, and issuers need to be happy. That's what we call the essence of a win-win situation. So far, again, touch wood, we've been doing fine. We've been recognized by the government as well with an honorary medal for the job we've been doing for the government. And we're looking forward to continue doing work in Mongolia. Quality work, and anybody who's interested in raising funds or in need of consultancy services, feel free to contact. And thank you very much for your audience, for listening. And if you want to have any questions or anything you want to discuss, I'm here and we can talk about it. Thank you very much.